Good evening, everybody. Sorry for the delay. Darn thing keeps locking up just as I get started. All right, good, John. You're wearing your golf stuff in the thunder and lightning. Remember, if it's thundering and lightning, you stick your 1-iron up in the air, because even God can't hit a 1-iron. Okay. As we can see, we're still in this wedge formation. So even though we had a big update today, usually I'll try to take a few minutes on how to do that. Even though we had a big update, remember what the nature of this market is. Up, down, up, down, up, down, down, up, down, up. So, welcome back, Victor. So even though we had a big update, doesn't mean we're going up. We're still caught in this, and the nature of this market has been very choppy, not really going anywhere. The NASDAQ still has to get out through this area. So we're still not in a convincing trend of any sort. The strongest one today, though, was the transportation index, which did come back up significantly up above the T-line. So that's a good sign that at least the market isn't, they'd have to take it down pretty hard to still, take it down pretty hard to get back below the T-line. Well, an inside day, Big Al, is a Harami day, which means the selling has stopped, but we don't necessarily know whether the buying has started. That's not what we want. That's not what we want. The S&P 500 also, as you can see, is in this big wedge formation. So the things that are still influencing the market is that crude oil, we've been long crude oil here for a while, and not only is it trading above the T-line, but it's still trading above the 3T line, which means there's really no selling pressure in here yet. And the interest rates, the 10-year notes, just relatively flat. That's the same scenario with the 30-year bonds, just flat. Gold prices, not really going anywhere. Right now, it wouldn't be long or short gold because there's just no direction to it. Same with silver. Silver is selling off much faster. That is silver. Let's see if I can figure this one out. Silver's still in kind of a downtrend. Let's see, what else do we look at? The dollar. A lot of the earnings from companies that were overseas are getting hurt because of the stronger dollar. I think they even showed some of the Royal Caribbean, Carnival, those type of cruise ships. A lot of their earnings come from the sales they have on the ship. And because everything's in the dollar, foreign cruisers are just not spending as much money because they don't have, and compared to the dollar, it's not worth as much. The dollar still in a very slow uptrend, but waffling. The one that I missed, but there was no way of knowing this was going to happen, is that live cattle had a big bearish engulfing signal and gap down again today. So it's still in a strong downtrend. I am shorting live hogs, or lean hogs, because it's got a little left-right after the big down day. So I shorted in here, looking for it to open weaker tomorrow. The grains, let's see, what is the N for soybeans? Soybeans in a slow uptrend, but it's caught here in this kind of sideways mode. Not trading that one right now. Whereas wheat looks like it has bottomed right at the same level. There's your little morning star signal. Right at the same level you had a morning star signal over here. So this one you can start looking to buy, especially if they can bring this up through the T-line tomorrow. Right now it's down $1, or not $1, but $0.0125 after hours. But I'd be ready to buy this one on strength. I don't know what corn was doing. Corn selling off after hours also. So does silver down provide guidance? Probably, not necessarily. I would suspect that gold is still in a downtrend. It's just not as exuberant as silver. So UZ wanted to see how you traded commodities. There's a different element of trading commodities than there is stocks. If you're buying whatever, IBM, and you're buying 100 shares at whatever it closed at today, 166. What did I say, 100 shares? That's $16,616 to own that. If it goes up to 170 and you want to buy 100 shares, you have to come up with 17,000. So you're paying for the price of the stock. Whereas on a commodity, commodities have what they call margin requirements. So if you've got a $20,000 account and you want to short lean hogs, what you look at is what is the margin that they require. And the initial margin is $1,320. So what that essentially means is that if you wanted to short cattle, or I'm sorry, lean hogs, for each contract that you shorted or bought, whatever which way you wanted to go, they would take $1,320 of your buying power. Let's say you're $20,000. They take $1,320. So if you shorted two live cattle, that meant you would have to have a margin requirement of $2,600. So they would use that as what your value would be out of your account. Now, not out of your account, but that you could buy. So obviously, if you wanted to short hogs, you couldn't short 100 contracts or whatever you decided. It would be the amount of money that you had in your account and how many contracts they would take out as your margin. Now, if you shorted this from whatever they closed at, this level, let's say it shorted right at this level right now, and you shorted two contracts, it doesn't matter whether you shorted it here or here or here or here, you would still be using up your $1,320 per contract. What does change, though, is as soon as it starts moving down, then the value of your account goes up. Or if it's the opposite way, if it goes up after you shorted, the value of your account goes down. So you don't need to have, you're not buying 100 shares of a contract. You're buying the contracts and you're using the margin against it. So cattle has 1,320, and the reason they set those margins is based upon the daily or the volatility of a price move. On the other hand, if we were going to short, say, gold, then you have to find out how much your gold contracts or what the margin is. And your margin is 4,400. So where you shorted 2 contracts of lean hogs, you used up $2,640 of your available purchasing power. If you shorted 2 contracts of gold, it would take $8,800 out of your buying power. This is just CQG, the charts, and then you can pull up this information. And that's the reason I use Thinkorswim, is because I can trade commodities, options, stock all out of one account without having to move money back and forth. So it makes it very convenient. A lot of times if you're trading commodities, you have to set up your account at a commodity trading firm. And so you have to move up money over there, and then you're trading your stocks over at another brokerage firm. Thinkorswim makes it convenient. You can keep all your money in one account. So the difference between trading commodities and stocks, the commodities trades are just as simple as, or analyzing the charts or trading the charts is just as easy as trading a stock chart. As I say, right now we're long crude oil. Crude oil, I'm staying long as it stays above the, that I look at the daily chart to see which direction I think the overall trend is moving. Then I trade off the 10-minute chart. So if I see something like this, that tells me, all right, we've got kind of a great old Morningstar signal down here. I stay long until I see the sell signal, and I take my profits. I might come back in, and then I close back here, I close back out the trade. So right now, and these are after hours, so they don't even move around as much. Let's see, so if crude oil moved up a point, well, let's say $1, I think it's, I don't pay attention to that anymore. I just usually watch the account. So for every 1 penny that it moves, that's $10 of that's $10 of profit. So $1, yes, it equals $1,000. So if you bought a contract, you have to have a margin of $5,390 to trade that contract. And if it moved from, where are we, around $57.80 to $58.80, that means your $1,000, or that your $5,390 has just picked up a $1,000 contract, or $1,000 profit. How do you close a contract? Same way, just as the way you buy it. Is that if you're buying it here and you're getting ready to sell, you hit a sell signal and sell that same contract. So they're just as easy to trade. And again, I trade off the 10-minute charts. So I was long early in the day. I closed out the long and went short. And I usually, my rule of thumb is if you had a strong move, the first time you see a buy signal, especially again, our simple rule that we use on any chart is the further away you move from the T-line, the higher the probability it's going to come back and test it. So as soon as I see some buying and I'm short, I close out the position. What's my worst case scenario? It comes back down through this level, I can re-short it. Yeah, and going along that same concept that if this is down $1 and I only make 80 cents of it because I closed it out when it was time to close out and re-shorted it when it was time to re-short, that's fine with me. The higher your correct trade ratio is, the stronger your compounding effect will be. Yeah, yeah. So if you're trading futures, yes, you need to step lightly in it. But the advantage of trading futures is that it has the exact same charts as a stock chart or anything else. So anyways, that's why we're kind of staying long on crude oil, because you can see that it's slowly moving up, and with it closing up here, it closed above these little highs over here. Let me make this chart smaller. Which means now we should be in an uptrend after a double bottom down here. Notice our Morningstar signal, our left-right combo. We're staying above the T line. So that's how you kind of evaluate when did they start buying. When they hit bottom down here, now we've done a double bottom. Okay, let's see. I'm trying to think of what else. Gold, silver, dollar, interest rates. I guess we hit them all. All right. Yes, and I always put my. Yeah, this is where you when you put on a trade. Where was it that I put on a trade? Oh, I bought some as it broke out through this level. So had a good quick profit, but then it turned right around and I put my stop right where I bought it, which was right about here. So if I get into a trade and it's running positive, it should be running positive, obviously. I don't want to see it come back down through where I bought it, because that means it's going in the wrong direction. So the first stop I put, if it's running and it's broken through the level that I bought, I immediately put in a stop of where I bought it, because it shouldn't come back down through there. Now, if it come down here and started back up again, then I would have moved my stop up here. And I'll pick out positions that would, or levels that would tell us where it shouldn't come back through based upon that chart pattern. We'll see what happened on cattle. Cattle yesterday hit the limit of being down. The limit is that it can't go any further that day. That you could buy it if you wanted to, but you can't sell it because it's already hit the down limit. Then they gapped it down, and they pretty much took it down. Usually the limit on cattle is $3, but right now they must have expanded the limit because it was down $3.12. And let me take a gander here at sugar. Oops, F.SU is N. SUAN. Well, this is not working out. SUEN. Well, shuzbutts. F.SU. Okay, this is sugar. Sugar did a gap down, so that looks like a good short tomorrow, because we've got the doji gap down. Let's make this bigger. So again, you trade, and a lot of people say, well, can you trade commodities as well as you can stocks with candlesticks? The answer is candlesticks were developed off of the most basic of all commodities, rice, which doesn't move around very much, but the Japanese rice traders not only got rich from it, but they made fortunes. Coffee is just moving sideways. I wouldn't be long or short this way. A J-hook in sugar. Yes, I can consider it a bearish J-hook, but I look at it more as this. This is one thing that you always want to kind of, what's your first analysis of a trend? What has the trend been doing? The trend's been heading down. Now we've got another sell signal. Where do you think the trend's going to, or what investor sentiment is? It's still down, right to the bottom of that channel. So there's your doji gap down with stochastics in the overbought condition heading down. That's a very high probability short. Okay. Some of the stocks that we're watching is we've got a buy recommendation on TSRO. Just notice the J-hook pattern. Nice little gap up here, stayed above the T-line. And notice where we are right now, right at the breakout level. At a doji, another doji. If they open this positive, where do you think it's going to? Well, the first target is probably the top of this channel, which could bring you up here someplace. And the second would be if this is wave one, which moved 25 points, 25 points from here takes you up into about the $80 range. Can one lose more than the margin in trading commodity? Yes. All you're doing is that's the amount of money that you're putting up to get into that contract. So let me take a back step here. For example, the margin on cattle is $1,320 also. So let's say you bought on positive trading here, you bought 3 contracts and then it hit down the limit that day. Well, your 3 contracts would have been $3,960, but down the limit, I can't even imagine what that was. That's probably, yeah, you were probably out $4,000 or $5,000 and then another $4,000 or $5,000. So the margin is only the amount of risk that the whoever the brokerage is willing to let you what do I say? They want you to have at least $1,300 for each contract that you buy, because they know on most of the time it's not going to move around much more than that. But that has nothing to do with the amount you can gain or lose. So if you got caught down the limit, you may have been out $4,000 or $5,000 on those 3 contracts, and then what you have to do the next day. That's why they put a limit, because if something is selling off, what's happening? There could be lots of panic selling. So the limits are to keep people from driving the price all the way down here and wiping people out, wiping their accounts out all in one day. So at this point, when they hit the limit, that gives people time to stop and think of what's actually happening. Yeah, yeah, the Swiss, that's true. So there's, okay. Anyways, we'll do a full session one night on trading commodities, but there's really nothing to it other than having, instead of you're still trading off the charts. It's just you have a different formula for how much you can buy. Okay, TSRO. What was the question up here? Is it a concern that we are buying TSRO into an approaching overbought condition? Or just watch carefully? Now, remember, this is kind of a fry pan bottom, but it's a part of a J-hook. And where do the stochastics usually occur when on a fry pan bottom breakout? When your stochastics are already in the overbought condition. So a very simple way to analyze it. You're buying the signal when you're in the oversold area. The pattern is usually going to break out when you're in the overbought area. Do you use stops when trading your commodities? Yes. Yes, if I was buying, which I did, crude oil today, off the 10-minute chart, the after hours don't really matter that much. But again, let's say I I bought here. I put my stop where I bought it, only because I was out the door because of my knee. So I just put a stop where I bought it, that it shouldn't come back down through there. Now, if I'd been here, I would have stopped out right here and then waited to buy it when it confirmed getting back up above the T-line. If I'd bought it right in here, or let's say right here, then my stop was right back here at the T-line. It shouldn't come back down through that. What's the rationale for that? Because if I'm buying on this pattern, which way should it be going? It should be going that way on our J-hook pattern. It shouldn't be coming back below the T-line. Have commodities been more profitable for you than stock trading? Oh, Monkey, that's hard to say. There are some months where I'm just hitting every commodity trade just right. And I guess earlier in the year when I had to buy or pay for the barn and the kitchen, I took $17,500 up to $177,000. Then I had to pull money out to pay for the barn and the kitchen. So I'm back down to where I've got about $40,000 in there. And so when I'm trading each day, I may have half of it in options and the other half in commodities. If the market doesn't show a lot of real good opportunities in options, then I might beef up the commodity trading. Or if I hit something, let's say I happen to been lucky and been short cattle as it pulled back, well, I might, because my profits are growing, the account expands immediately as based upon the value of that trade. I might have 3/4 of my money sitting in commodity trading because that's what's moving right now. On the other hand, you sometimes get into an area like this where it's not worth trading any commodity because there's nothing going on. I'll make more money over in the options side. Okay, that's all right. So where were we? TSRO. So to answer your question, no, just because it's in the overbought condition, what's the pattern telling you? The pattern's telling you if they open this positive, we're probably in wave 3. If they open it lower, it tells you, all right, they didn't break out. They might be doing a little cup and handle. So that's why we want to be able to identify each of the patterns that we're aware of. So what we're expecting right now is a positive open. What's it going to tell us? They're going to move it in the direction how they open it after a doji, which means they'd be taking it up, confirming that we are in the next wave. And if we are in the next wave, it could be a significant move, like another 25 points. That was the same rationale of why we're long Cyber, because Cyber, when it broke out, it moved from 32 to 70. I should be able to figure that out. That's about 38 points. Well, if it moves 38 points from this area, that pretty much tells us they're going to take this back up into the 95, probably the $100 area, which means, and why would we suspect that? Because usually if there was so much energy here, everybody was excited about getting it in or getting into this position, and then there's profit taking, and now they're coming back in again, usually that same energy is going to create the next move like this. That's why we do have wave 1, wave 2, wave 3, or the J-hook patterns. Okay, also SDKY is set up nicely. There's your big scoop type pattern, and notice what it's doing once it got up through the 50. Not only did it get through the 50, but they came back and used the 50 as support. You can still be buying this one, because if it breaks out through here, that means our scoop pattern's in progress, but there's still going to be a lot of upside move to this. The scoop pattern is very... That wasn't the scoop pattern. Which one was it? There's the scoop pattern. And our recommendation when we bought CPE. There's the flat handle. Oh, see, this thing is freezing up again. There's the flat handle. There's the buying. And then when it came out through the handle, we're still in that slingshot effect to the upside. And also we want to be able to identify what the Japanese rice traders tell us over and over is let the market tell you what the market is doing. What's the market telling us on this one? SEMP tells us when we're above the T line, we stay long. When it comes below the T line, we get out. When it comes above the T line, we go long. When it comes below the T line, we get out. When it comes above the T line, we go long. Because this is kind of a strong, steady eddy with profit taking. So all we'd have to do now is once it's up above the T line here, we just stay long. Just let this run as long as it stays above the T line. It takes the I want to say the anxiety of whether to be in a trade or not. There's that scoop type pattern on our recommendation of FMSA. Bullish engulfing, slingshot effect. Notice what they haven't been able to do. They haven't been able to close this below the T line. Now, what we do have today is that long-legged doji in the overbought area. That tells us if they start trading lower tomorrow, we're going to start taking profits because what does a doji tell you? Indecision. What's a long-legged doji tell you? Big indecision. So we're just watching to see what their decision is from here. Yes, the T-line is the 8 exponential moving average. Just a very simple rule, Gary, that once you see a candlestick buy signal or close above the T-line, you can stay long until you see a sell signal and a close back below the T-line. Right now, Lori, I would put, I stop, let me get back to it. Yeah, you could call this a cradle pattern, but more you see the slow curve double bottom, and it can still be considered a cradle pattern. Doesn't matter what you call it, just as long as you recognize that they based it and they've started positive on it. Well, when was that? FM. I would probably not want to see the trading come back down below today's open. Let's make this bigger. If it came back down through here, that tells me they're at least coming back down again to the T-line, and again, they're selling it off. I'd probably take some profits and then see what it does at the T-line. Only because this is giving us a warning. There's lots of indecision going on up here. We need to see that the decision is still trading positive. And with oil trading positive, and that's making things like whiting, which I'm holding or have people holding for longer term holds, only because of the again, part of the fundamentals of whiting, which is that they own a big section of the, or have a good position up there in the Balkan field in North Dakota. So anyways, this one you can still be buying as long as it stays above the T-line. And SN was another one that we were holding as far as oils. You can see that there's a big fry pan bottom, and as long as it stays above the T-line, you stay long. Let's see, did we do Depot? Depot. There's your J-hook pattern. Notice what they did on the profit-taking day. Took it right down to the T-line. And when I say right down to the T-line, you also have to keep in mind that nobody has the T-line on their charts. And I say nobody, and the percentage of people is so small that it's not relevant, whereas everybody has the 50, the 200, and the 20 on their charts, which makes them magnets because that's where all the major decisions are. So when this comes back down and hits the T-line, it's not because there's people saying, oh, I'm going to buy at the T-line. It's because, well, they're not saying that because it's usually not on their charts. What it is saying is is that the T-line is basically like a Fibonacci number, a natural number where human nature kind of takes it back. And so we're watching a support and resistance level of human nature, and we're watching the graphic depiction of investor sentiment. Those two combined pretty much tell you or give you a pretty strong combo of which direction the trend will move. Is it also stop loss in this case? Is it also stop loss? Yes. In this case, if I saw it close back below the T-line, I'd close out the position. Because where are we? We're up here in the overbought condition. It's been telling us that the T-line has been acting as support. And as soon as it closes back below the T-line, it basically tells us it's not acting as support anymore. LPI, all you can do right now is stay long on this one. Now, if tomorrow it closed back below the T-line, that's giving you two messages. One, that it is closing below the T-line, and two, that this chart pattern isn't looking good anymore. It's more sideways. Close out the position. How is the 3 T-line used once the price is extended? The further away you move from the T-line, the higher the probability it's going to come back and test it, which makes the 3 T-line telling you if not only are you away from the T-line, but if you start moving away from the 3 T-line, which is a faster mover, then you start using that. So once I get up in a situation where I'm in the overbought condition and I've moved away from the T-line and the probabilities are going to bring it back at some point, I start using the previous day's open. And if it comes back down through there, it's time to take profits. And if that kind of coincides with the 3 T-line, it's just more reason to start taking profits. You've mentioned that when there is little movement in stock price, you generally suggest to get out till a decision is made. In oil, isn't there also limited movement in the last 3 days, yet you say to be long? Can you explain what you okay? That's not because we're saying, all right, I mean, we're looking at it in hindsight right now, that crude oil is still in this uptrend, and it's even on this uptrend. You can see where they're closing it. They're closing it above the 3 T-line, which basically tells you they aren't selling this off with any great force, which also tells us the uptrend remains in progress. The fact that it has moved sideways, actually only for 2 days, because it was up that day, down this day. Today it was back up near the top end of that day's range, which was Friday. So it wasn't that it was moving sideways, it was still in an uptrend. So this isn't enough to say that we're sideways. All this was is up day, down day, back up indecision, and this is after hours right now, which I don't put a whole lot of weight on because I want to see what the big boys are doing. So right now, all we can assess from this is that the uptrend is still in progress. There's been no sell signal confirmed. Yes, tickets for violations. Okay, let's see. I'll try to get back to some of the stocks here. ADXS is a perfect example of why you stay long unless it closes below the T-line. So we had that big down day, and everybody said, oh man, this is a sell-off. But you got to notice what happened on that day. What signal, what sell signal is this? Anybody? Class? What was this sell signal? That was not a sell signal. And where did it close? It didn't close below the T-line. So all you can do is say, all right, I've got a selling day. It's not a reversal, and it's not closing below the T-line. What's my criteria? My criteria is I want to see a sell signal and a close below the T-line. In this case, neither of that has happened. So all this basically told me is I got kind of this little fry pan bottom breakout. I'm getting ready for a J-hook pattern. The sell-off was not a reversal. It was just a sell-off. Yes, basically just came back and bounced back up off the T-line. We recommended HEES. Kind of big rounding bottom, and notice what it hasn't been able to do. Not only has it not been able to close below the T-line, but it's using the T-line as support. And once again, remember, it's not on everybody's chart. This is just kind of a natural support and resistance of human nature. So they opened it right on the T-line on Friday. Today, look where they brought it back to, right back to the T-line and took it back up. So where's our logical target? Still looking for the 200-day moving average as being the next target. Why? Because that is on everybody's chart. And if you had been buying here as an institution or as a trader, where do you think you're going to watch to see if it can get to? Up here at the 200-day moving average. Does the possibility of J-Hook make ADS a buy again? Yes. And that's exactly what you should be able to analyze, is that if we know what a J-Hook pattern is, if we know what a sell signal is or the lack of a sell signal, then we know, all right, if we've missed this move, there's a good possibility with a little left-right combo today, still trading above the T-line, that if they start trading this positive, we've got a J-Hook pattern. So this gives you double insight of when a sell is not occurring and when buying is coming back in and creating another opportunity. If you're not in HEES, when do you get in? On positive trading tomorrow. And you still just use the T-line as your stop. When would you buy HEES? On a positive trade, positive open tomorrow. If I start seeing it come up, say through $28, that's telling me this pattern is still in progress. A left-right combo is this one right here, where you have a doji followed by a bullish engulfing signal. Remember what a doji represents. Represents indecision. And if you have a day of indecision and then followed by a big bullish engulfing signal, that's like that little left jab followed by the big roundhouse right. It's told you which way they want to go. Yep, Jim just gave a description of it. All right, so this is why we want to know what our patterns and what we expect after certain type of signals. Notice what happened in Gene today. Gene gapped up, and where did it gap up? Off a doji through the T-line above the 50. Is this still a buy? Look where your stochastics are. You've been kind of riding, getting toward the oversold area. Where would it tell us that the bulls are back in control after a day of profit taking? If they came back up through today's open, that would tell me the bulls are still there. You want to start buying this. Why do you want to start buying this? Because this is our best friend signal, a doji followed by a gap up near the oversold area. There's a good possibility they're going to be able to run this back up. I would bet there's a teeny little itsy bitsy gap there. So that's your first target, is about 880 or so. Some of the other ones that, and this is the nice thing about the chat room, if you get a chance to stop in the chat room during the day, that you got hundreds of eyes, pairs of eyes out there finding the best charts. OXM, there's your doji gap up best friend, and what is it forming? A J-hook pattern. Makes a very viable trade from this point. What's your worst case scenario? That you're in a 45 degrees. It still means that you're going to be heading in an upward direction. Let me see. I think crude oil. Nope, crude oil is still backing off a little bit. AX TA. Same scenario. If this opens positive tomorrow, especially if it comes back up through today's open, after a left-right combo, Morningstar signal, J-hook pattern, where do you think the next target is probably going to be? Probably back up here to the top of the trend channel. HQCL. Another J-hook type pattern. It gapped up and did some profit taking today, right back to the support level or where they broke out. If it came back up through today's open and tomorrow's trading, I want to be a buyer because that tells me wave 1, wave 2, wave 3 is now in progress. MEIP, there's your fry pan bottom slow curve, and what's just got this one started? There's our doji sandwich. And what do we expect after a doji sandwich? More upside. So if we have more upside, where does that put this stock? Out here in no man's land, there's no resistance. First target should be up here to the 50-day moving average, which would give you a good 240 to $4. I'm guessing that's about a 70% profit potential just to the 50. And CRMD, anytime you see there's your doji bullish confirmation with a booster, and what's the booster tell you? That during the day they were still selling this off, and then they changed their minds and headed the opposite direction. So that basically tells you down here they apparently have wiped out all the sellers when the bulls stepped in. That pretty much tells us there's probably not very many sellers in the way anymore, meaning your next target is possibly up here, or wave 1, wave 2, going into wave 3, that you could have another potentially as high as a 6-point move on this one. Rovi, there's your kicker type signal. There's your scoop type signal. I would think that you're at least up for a 10% move to the 50 and possibly the 200. Montana, notice how it was in a slow, steady uptrend, and then they broke it out. And here's just one very simple rule. If you see a big move like this, and then there's profit taking, if they open up positive the next day, that tells you the profit taking is over. They're still moving in that direction. Plus, on top of that, notice what type of pattern we've had over the last 3 days. A doji sandwich. So what's that telling us? That the buyers are still there. And what do we expect out of a doji sandwich? More upside. So what can we analyze from this chart? It goes in a nice steady uptrend. Now something's happened where the trajectory of that uptrend is going to start picking up a lot of speed. What type of writing is that? I can't even read my own writing. That P-A-I-C. P-A. Well. P-A-Y-C. There's that little scoop type pattern. And where did this bounce? Right off of this resistance level. Where's our first move expectation? Up here to this level. But they've bottomed it 3 times. Now they've done a doji hammer gap up. You can be buying this one. You just watch to see what it does once it gets here. You say you studied first to be a doctor? Oh, yes, Miss Peggy, a doctor of love. Oh, I couldn't be a doctor. Oh, handwriting. Okay, now I get you. There's your doji gap up. First target is right here, which would be this downtrending channel. Oh, Andrew, if there's no more sellers, that means there's not the massive amount of sellers that was knocking the stock price down. So now they're buying from a much lesser supply of sellers. And let's see, there's a few more in our portfolio that still watching QIHU. There's that slow curve breakout. There's a consolidation right back to the T-line. A bullish Harami today, right smack dab on the T-line. If this breaks out, where do you think our next target is? Up here. So as an option trade, looking for this target, And then the closer we get to expiration, if this was 2 weeks away from expiration, I'd probably be buying the 50s and selling the 70s on a spread. Positive open, Gary, is that when you wake up in the morning, you don't want to see the pre-market futures down 150 points on the Dow. That means there's probably not going to be a whole lot of selling going or a whole lot of buying going on the open. If we wake up tomorrow after the market was up, was it 209 points today? If we wake up and the pre-market futures are flat or even down 20, telling us that they aren't selling off the market, there's probably just profit taking, and the stock that you're looking at is opening flat or starting to trade positive, yeah, that's a positive open. That means nothing has knocked that price down. Turn is coming on TV in 5 minutes. All right. Yeah, I hate to watch good TV programs on TV because that means I'd sit there and watch them. And Bonbon, ever since we started buying after the kicker signal, there hasn't been any anguish in this one at all. Very simple rule. We hang on as long as it doesn't close below the T-line. Where do you think the likely target is? Up here at the 200. And for the long-term investors, this chart looks very good. BPT. Notice the slow curve, kind of the bobble. Now they're back up through the 50. Now what's your next target? More than likely up here to the 200. And they pay a 10% royalty. So not only are you have a potential of a 25% upside, but you got 10% while you're waiting. Eve, I haven't done anything on the short side. We do have some shorts, though. Let me see if I can get to them here in a minute. Did I do pod? Yeah, we did pod. Shuzbutts. R-E-T-S, is that it? No. Dang. How can I write this poorly? Can't even read. Gimmo is another one that we own. There's that slow curve fry pan bottom. There's a bullish Harami today. If this opens positive, you basically have a J-hook pattern in progress. And RGEN. That's got a nice setup. And then you had the little left-right combo today. So if you're buying this one on positive trading, and this is an area where sometimes you see them gap it up right through this level. So if everybody knows there's a resistance level here and they gap it up into that level, that means they're going much higher. They're not, don't have any concern about the resistance level anymore. Tube, there's a nice J-hook pattern. There's your inverted hammer. There's your support on the T-line with lots of indecision. This one is a very good looking chart. I wouldn't be afraid to be buying this one on positive trading tomorrow. VNR. That's Vanguard Natural Resources. Notice how it did kind of a double doji, which means they took it up, they pulled it back, and then they took it right back up again. It was more of a doji on TCNet and Metastock. But this one's telling us that they are supporting on the 50. There's still more upside to it. And GLF. There's your cup and handle. Fry pan bottom, pull back. When they break through a resistance level, what do? They come back to test it to see if it's going to act as support. In this case, we could tell back at the 50 that there was indecision. Now at that indecision, there is a decision. I wouldn't be afraid to be buying this one on positive trading tomorrow. That's somewhat along the same lines as BBT. Broke through the 50. How far out do you like your expiration? I'm usually at the closest expiration, unless it's too close. So right now I'm buying the May options because they're 3 or 4 weeks away. If we get within 2 weeks, then I look at the spreads because your maximum profit on the spreads is going to be close to expiration day. And if it's the last week of trading, I'll do, instead of a debit spread, I'll look at the credit spreads. And the credit spreads aren't really profitable, but the probabilities of being correct and making money on them are extremely strong, especially when you have the ability to see what the charts are telling you, what direction things are moving. Usually you're going to catch the premium either by selling a put spread, or if it's heading down, you sell a call spread. Oh, they paid the dividend today? All right. James, that's a whole nother session, whether you're buying in the money, at the money, or out of the money. And again, I'm usually within the, it all depends on the nature of the stock price. For example, not too long ago, I had the calls on Netflix because it had a doji sandwich and it broke out, and I had some good profits here. The next day, they were going to do earnings. So I took my profits and I bought spreads, a credit or debit spread, which was, at this time, I think I bought the 49 or 490 500s, and I paid, I think it was $3.60 for them, which was a good ratio because if it worked, I'd make 10 bucks. But when they gapped it up and started taking it up, my $3.60 already went to $9.50. So that was about the maximum I was going to make on that spread, so I went ahead and took it. So I do the spreads to have less money exposed, because if it had gone the other direction, I didn't have as money exposed after I'd taken the profits off the table. Why shorter time frames on straight? No, not shorter time frames, longer time frames on the calls and puts. The shorter the time frame, the more likely I'm going to be doing a call spread or a put spread, depending on the direction. The longer the time frame, because if I had bought a spread and it had moved up, let's say right in here, more than likely the option that I sold, the higher price one, was probably going to move percentage-wise faster, because where are people usually buying their options? They're buying it close to the money or just slightly out of the money options, so those move faster than deep in the money spreads because there's not as much leverage there. Okay, I think that's about all I've got for tonight. ATLS. Big fry pan bottom on this one. And this one's an interesting one because if it even came back up to the beginning of the fry pan bottom, that's still a 30% move. Then if it broke out up here, that's pretty much an 80 or 90% move. And then BRCX. Well, is it BCRX? That's got a nice little chart. Notice the bobble in here. Came up and hit the 50, which was also this resistance level. Then it bobbled in here. Came back to the T-line. They couldn't close it below the T-line. They couldn't get it back up above the 50. Then you had your hammer gap up, telling us our next price target is the 200. Okay, I think was DD one of the the Bonanza recommendations. You're on a debit spread. I wouldn't worry about it. You're long. Yeah, just stay long. That's a nice little scoop type pattern. Okay, all right. With that, Jim, go ahead and do the double line. And in 4.8 seconds, do the next double line. Otherwise, we'll be scrolling all night long. IBM, big kicker type signal. It's not a very exciting stock, but if you like it, you could be buying this one because not only did it do a kicker signal, but it broke out through the top here. I would think that the next target is up here at the 200-day moving average. And Wynn Resorts, nothing here yet. It's got a Morningstar signal, but it needs to get back up above the T-line. And then your next target is going to be right here at the resistance level, which is also the 50. Lucent, let's see, Alcatel. Yeah, you don't want to be in this one. That gap down, told you there was bad news. And Cisco. Cisco, you can stay long. It did the little bobble. If it opens positive tomorrow, pretty much telling you the T-line's acting as support. Micron, you stay long on this one using the T. ACIW, that one you can be buying. Just make sure your volume is good. It looks like a low volume stock, but that's a nice little fry pan bottom with a doji gap up. And notice what it did today. It came back and used the T-line already as support. And when you see that, that's usually a very strong indication they're not taking it down. They're supporting, they're taking it up. Crust, stay long on this one. This one has got that fry pan bottom. You probably want to be ready to buy this one on any positive trading tomorrow. And SEIC, I said that right. Another one that if it moves positive tomorrow, you can be buying this one on the breakout. Coop needed to get back up above the T-line. It hasn't gotten there yet. So right now, if you're anything, you should be short. You shouldn't be long until it does come back up above the T-line. MBT, another one that we own, but this one has to open positive tomorrow to stay in it. And AMP, did AMP get whacked today? Yes. So this is one where you shouldn't have been in it because it was trading back below the T-line. And with the trading back below the T-line, look at the trajectory. There was none. It was going sideways. If you did own it and it's down here, close it out because it's not going to be doing what you want it to be doing. GoGo. Stay long on this one, especially if it opens positive tomorrow. You use the T-line as your stop. Philip Morris, look for a 45 degree to come off of here. You just stay long on this one. And Nubo also, look where it came back to today, right back to the T-line. You don't want to see this one close below the T-line, and you could be buying this one on positive trading tomorrow. Kroger, stay short. This is one of those where you observe the obvious, and the obvious was that as long as it stayed above the T-line, you stayed long. You could come out, get back in. Come out, get back in. Come out, and you don't get back in until you see a buy signal and a close back up above the T-line. United Parcel Post, that looks like a big reversal. There's your little scoop type pattern. You can be buying this one. Just be aware that it's not a real fantastic mover, but it's moving in the right direction. Let's see. Yep, we're not getting the. That's the Australian bond index. Can't. And let's see, the Japanese yen. Japanese yen. Japanese yen, I wouldn't be long or short. It's been going nowhere for a long time. And PRLB, you stay long on this one. You've got your classic fry pan bottom, J-hook pattern setup. You definitely can be buying this one on positive trading tomorrow. Buffalo Wings, another one that at best you should be short until you see a buy signal and a close above the T-line. Notice how it failed at the 50. So you're probably in a blue ice failure, which means your next target is the 200-day moving average. Dumpling top, yes. So you can observe that it's not picking up any steam. It's picking up more steam to the downside. And now you've got that bearish J-hook blue ice failure. Look for the 200 to be the support. Burlington, you stay out of until it does close back up above the T-line. But there's another one where you had a steady eddy. Now it's come back to essentially the 50. You don't need to get back into this one until it does get back up above the T-line / 50-day moving average. That might have been it. PACD, was that what I was trying to write? This one has to open positive to stay in it. If it opens lower, notice what you have after the gap up shootings or doji. You got a bearish doji sandwich, which means if they open this lower tomorrow, you probably have more downside. Not a good one right now. That one should be closed out on weakness tomorrow. ESPR, I wouldn't be long, Marty, because what's the chart telling you? It's telling you you're in a wedge. Stochastic's heading down. What is your risk reward looking at this chart? Is this ready to go up, go down, or go sideways? Well, that's basically all you can analyze on this chart right now, that this could go up, go down, or go sideways. So you don't have anything here telling you you've got any advantage of looking at this chart. So the worst case scenario would be you close it out. If it starts breaking to the upside and breaking this downward trend, then you can buy it back. I would rather pay up $5 for a stock knowing that it's going in the right direction than sitting in a stock not knowing which direction it's going. Sun Edison, all you can do here is stay long, as long as it stays above the T-line. ONSI, this one you can be buying. There's that flutter kicker. Did a down day, gap up doji, a bullish trade from there. This one you want to buy. There's going to be more upside. Just make sure you got a ton of volume on this one. It's only a 90-cent stock. And TWOU. Was that one of the first ones we did? Where did that one go? Ah, there it is. There's that nice slow curve breakout. And that was also the same as Legacy. Big fry pan bottom. You can get ready to buy this one on positive trading tomorrow. Line. Another big fry pan bottom. You can buy this one on positive trading. This one does have a decent percent return just to get back up to the 200, which would give you about a 50% return on your trade. Whoops. And FLTX, another nice J-hook. You stay long on this one. The Russell should have bounced right back up. As long as it stays above the T-line now, your uptrend is still in progress. SanDisk. SanDisk, having a hard time. It did gap down. It's not going anywhere. If you're not short, get ready to go short, especially if it comes back down. How come all these charts get so small? Especially if it comes back down through this level. If it comes down through here, this force of that gap down is still in progress. Yep. This is going to be bad. I won't be able to figure out how to. Let's see. PWE. Oh, man. Nothing wrong here. Just some sideways movement.
Hey, Sandy, it's Wally Grote. I just wanted to touch base with you guys. I heard the good news about the PET scan and just wanted to know.
Okay.
I'd like to see Claire's answer. So, hang in there and God bless. And here, keep in touch. Bye.
Okay, so anyways, PWE, just stay long on this one. Use the T-line as your stop. An ABMD, another one where you can be buying this one because it's basically told you that you got that little scoop pattern. You're ready to buy this on positive trading. Wabi, just stay long. Good looking chart. Loco, another one where you just stay long, staying above the T line. Did MU. XBI, just stay long on this one. Did Kroger. Disney. Disney, get ready for a flutter kicker. If it opens positive, you can be buying this one. Your first target is going to be the top of the channel, so you've got a quick trade there. And then you've got the possibility of it just continuing higher after that. The Qs, same as the NASDAQ, as long as they stay up above the T-line. We're still looking for a breakout to the upside. Hasbro gapped up. Look for a 45 degree to come off of here. Remember, you had a doji gap up. There's probably more upside to this one. SCYM, be ready to buy this one on positive trading. Be ready to close it out if it closes back below the T-line. Let's see, these, let's see, Ultra, okay. Same scenario as the Qs. We're looking for a breakout to the upside. Facebook still not really intrigued with this chart. There's nothing there to give you any real strong movement. I just think there's better places to be trading than Facebook at this point. 8, you can get ready to buy this one. You've had a belt hold. Now you have a bullish engulfing signal. And they're breaking out through this level. I wouldn't be afraid to be buying this one on positive trading tomorrow. Eli, another one where you just stay long. Watch to see what it does once it comes to the top of the channel, which is right up in this area. SPEC, that's a good looking chart with the next prospect, if it opens positive, breaking this downward trend channel of hitting up toward the 200-day moving average. Hill was in a nice steady uptrend. Just stay long on this one. And I don't know whether I can get... No. BRK dot B. Where'd the B go? No, I can't. For some reason, I can never get that one on here, John. CNC. I think this was a mistake. So you're in kind of a steady uptrend. Not a very exciting stock, but as long as it stays above the T line, you can stay with this one. And FNH. That's not working. ACRX. This one you get ready to buy, especially if it starts trading positive, because you're still coming out of the fry pan bottom and you still can't close back below the T line. That's telling you there's still more upside to this one. CMG, another one that you can buy in positive trading. Just be aware of the lack of percentage moves. So obviously this is more of an options trade. American Airlines. Looks like it's based right in here. You can buy this on positive trading with the expectation that it's going back up to the top of the channel. Stay short on FMN, WFM. And Keurig, stay short. You can see the steady downtrend. That could be BRKB. Let's try that. Okay, there you go. Nothing here to get excited about yet. You had a little kicker type signal at the 200. I just don't like this stock as far as there's not a big percentage move in it. Thank you, Stephen. CLD, that's flat. I wouldn't be long or short until that comes up through the 50. EPRS. This one's trying. It did a doji harami today. If it opens positive tomorrow, you can be buying it and do the T line as your stop. If it opens lower, close it out, because that means more than likely you're now coming down to the 200-day moving average. EPE. This one is in the bobble. If it opens lower and starts trading down, it's coming back to the T-line, which means it's probably going to bobble here for a couple of days. If it opens positive, you can be buying it. That tells you the 50 is not going to act as a resistance. D, some stocks aren't good movers because they're usually institutional type traders. For example, even if IBM moves up here to the 200-day moving average, that's about a 1% move. Unless you're trading options, it's not a good trading stock. It's something that the institutions buy and put away for a longer term. And there are other stocks that will just get into a funk where they're not good traders for a while. Texas Instruments, you can see the rounding bottom. It has to break this level to get excited about it. It needs to break up to that level. And Facebook is one of those. Right now it's not in a good chart pattern, so I wouldn't be trading it. That doesn't mean in a week from now or 2 weeks from now a pattern sets up and it becomes a trader again. Blue. Blue. Let's see, where did it close? Did it close back up? Close back up above the T line. You can be buying this one, or you can stay long as it stays above the T line. We did Kroger, AAOI. Another one that more than likely you're going to see it test the 200, which means it's just going to bobble in here. You stay long on this one right now until you see it close below the T line. But more than likely it's going to test the T line and then bounce back up off of it. FNHC. So this one's a chart that is not a good trading chart. There's nothing here. It's sideways. You couldn't trade this if you wanted to. And look at what the percentage move has been. It's been within a 3% range for the last month and a half. 2 months, 3 months. I wouldn't become interested until it did break out through the top over here. CNAT, nothing here. I would wait. I wouldn't be in this one at all. XXII, there's that little scoop breakout. You can stay long, just make sure there's a lot of volume in this one. It's not a very high-priced stock, obviously. And Tractor Supply, there's that little left-right combo right on the 50-day moving average, and it gapped up through this little downtrending channel. You could be buying this one with the anticipation that it's going to come back up to the top of the, or back into the channel again. Harman, another one you can be buying on positive trading. NVGN has had a very nice stock, kind of a flutter kicker type setup in here. There's your little trend kicker. You stay long, and this is, notice where this came from. Kind of this big fry pan bottom, and where did it break out? Right at the beginning, where they started selling it off. Kroger, is that a buy? Not yet. No. Nothing here to tell you to be buying this one. SYUT, stay long on this one as long as it can't close below the T line. Hill, you can buy this one on positive trading with the anticipation your next target is the 200-day moving average, but you definitely want to see some strength on this one. And Leaf, nothing here yet either. Just kind of moving sideways. You need to see this break out, and it needs to do it pretty quick, or otherwise you're going to be in a sideways mode. WHXT is not coming up. Mac did a kind of a little bearish flutter kicker. If this opens lower tomorrow, you close it out immediately. Tells you there's a lot of pressure to the downside. SCHU, look for a 45-degree to come off of here. And Yum, little left-right combo after an inverted hammer. You can be buying this one, anticipating you're heading for the next wave up. LPL, that one's an overseas one to trade. You can buy this if it comes up through the 50 tomorrow, because that tells you this whole resistance level is breaking or being broken. We did XXII, we did that one. EGRX, just stay long. Okay, I think we got them all. We did it before the cows came home. Last one, Serve. Serve, you can get ready to buy this one if it comes up through the 50 and the 20. Telling you the down, you're in wave 3. All right, with that, everybody have a good evening. We will see you bright and early in the morning. We'll see you then.